So I don't know about you, but I have made virtually every mistake possible when it comes to investing. I've made some predictions on this channel which look a little bit foolish now, and I'm happy to hold my hands up and admit it. But I'm always trying to learn and I'm trying to improve. And one thing that I've always turned to and I've found helps me to improve as an investor is to follow the smartest investors on the planet and try to learn from them. You see, me, I'm just an average guy trying to get my head around things, but these people have decades of experience and billions of dollars to manage. That's why in this video, we're going to be taking a look into Warren Buffett's 2021 portfolio with Berkshire Hathaway, with a particular focus on his 5 largest investments. Now, before we get into it, I just have to say, this is not financial advice, and I'm certainly not a financial advisor. Also, I don't necessarily agree with everything that Warren Buffett says or the companies he invests into. But like I say, I'm just a regular guy and this is Warren Buffett we're talking about. So even if I don't agree with everything, I think it's really interesting for you and for me to see what we can learn from him. Okay, so let's get straight into it and let's kick it off with Warren Buffett's 5th largest investment as part of Berkshire Hathaway. And it is into Kraft Heinz. Kraft Heinz are a global food and beverage company who manufacture and market food and beverage products. But I mean, come on. I think we all know them as the guys who make this little beauty. I don't know about you, but I couldn't live without this. Now, let's take a look into the data behind the company. So first we have the PE ratio, which should give us an overall look into how cheap or expensive the company is compared to similar competitors. Now, unfortunately, as Kraft have recently been unprofitable, we can't actually calculate a PE ratio at this time. However, we can see that the industry standard is around 24.8 times. And we can see from this chart, Kraft Heinz's historic PE ratio, with the most recent value given on the 26th of June 2020 at a value of 19.7. Now, this chart on the screen here shows us the revenue of the company dating back to 2014. As we can see, there was a sharp rise between the middle of 2015 and the middle of 2016, but their revenue has been relatively steady since, even displaying a slight downward trend. Now, this chart here shows us the expected future revenue of the company based on the forecasts of analysts. So to be clear, the data to the left of this line, these are the past numbers, and to the right, these are the future forecasts. As we can see, forecasts are not exactly positive, with a slight dip expected in 2022, and overall, a relatively flat, even slightly negative trend is expected. Now, this chart shows us Kraft Heinz's earnings since 2014. As we can see, their earnings have been extremely inconsistent over time. In 2016, they crossed the threshold for positive and peaked in 2018 at just under $12 billion. However, since then, earning numbers have been largely negative. Predicted earnings are slightly more positive, with an upward trend forecasted over the next few years. Again, the past numbers are to the left of this line, and the predicted data is to the right. However, earnings are still not expected to approach anywhere near the peak seen back in 2018. And finally, this chart shows us the free cash flow data, which surprisingly has been more positive for the company. While there have been dips along the way, the overall trend has been upwards. However, this trend is not expected to continue, with an expected dip in 2022. And even in several years, predicted numbers are still not as high as today. Let's carry on and talk about Buffett's 4th largest holding, which is American Express. American Express is a global services company, with its principal products and services being credit card products and travel-related services. Now, with 6.6% of Berkshire Hathaway's portfolio in American Express, this means that for every $100 they've invested, they have $6.60 in this company. American Express have a PE ratio of 30.1. According to analysts, the current share price is around 19% higher than the fair price. However, let me just say this now. This is 2021 and the Fed is printing trillions of dollars. I don't think we're going to see many companies who are actually trading at their fair value. Now, here we can see the revenue history of the company since 2014. Between 2014 and 2017, revenue was relatively flat. However, in mid-2017, their revenue began rising with relative consistency year on year. That is until 2020 came along and wiped out much of this growth. Now, with American Express being so reliant on travel though, this should hardly be unexpected. Analysts are forecasting a strong rebound in 2021 and then a continuation of their previous growth in revenue. Again, as travel bounces back, it's obvious to understand why a strong rebound in revenue is expected. Their earnings over time have been far less consistent though, with a big drop in 2018 seen on our chart. However, to be fair, in 2019, there was a sharp rebound. Again, 2020 earnings have fallen sharply, but that was really to be expected with the links to travel. The data surrounding free cash flow shows no clear trend. Spikes in late 2018, mid-2019 and early 2020 have also been followed by huge crashes in between. Although then again, with the nature of travel being cyclical, maybe this isn't so surprising. Again, as expected, the data in 2020 was less than positive. In third position, we have maybe Warren Buffett's most iconic investment of all time, CocaCola. So with an investment of 8.6% of their portfolio, that means for every $100 they've invested, $8.60 is into Coca-Cola. The company has a PE ratio of 25.8. Now that is slightly above the average for the market of 21.1. However, when it comes to PE ratios, what really matters is the ratio compared with similar companies within their industry. Well, with the industry average of 25.7, they are pretty much spot on the average. Having said that, their revenue has not been so positive since 2014, because as we can see, the company's revenue has been on a downtrend for the past 6 years. In spite of this, analysts are forecasting a rebound in 2021, followed by a decent level of consistent growth in the following years. Now, like I said at the start, I don't necessarily agree with everything that Buffett or other analysts say, but I want to show you this as I think it's much better for you to get a well-rounded perspective on investments. Coca-Cola's earnings have been very inconsistent. Between 2014 and 2017, there was a downward trend. However, from then onwards, their revenue has bounced back, growing throughout 2018 and 2019 before being halted by 2020. Over the next few years, their earnings are projected to grow with relative stability. The data for free cash flow is similar to earnings, with a downward trend between 2014 and 2017, followed by growth throughout 2018 and 2019, before 2020 putting a dent in these numbers. By the way, if you're enjoying this breakdown, I frequently make videos like this, showing you what the world's top investors are doing with their money and how they're investing. So make sure to subscribe if you want to see similar videos like this coming soon. Now in second position, we have Bank of America. And with an investment of 10.6% of their portfolio, that means for every $100 they've invested, $10.60 sits in Bank of America's shares. The company has a PE ratio of 16.4. Now that is below the average company on the stock market by over 4, but is above the industry average, which again is the only number that really matters, with the industry average being 12.3. Overall, the shares are considered to be 25.3% overvalued compared to a fair value. But again, fair value doesn't really exist in this stock market anymore. Bank of America's revenue has been relatively consistent over time. However, there has been no real growth to speak of in the past 6 years, and we can even see a clear dip towards the end of the data in 2020. Their revenue is forecasted to rebound in 2021, but then steady out to similar levels seen before, so again, no real growth is forecasted. The bank's earnings, however, portray a more positive picture. While there has been a drop in 2020, their earnings were on a clear upward trend in the years leading up to this, and even after their recent drop, their earnings still sit at a much higher level than they were just a few years ago. Their predicted earnings are forecast to rebound in 2021 and grow more steadily in the years following. For this, I would personally add that you should follow the Fed's interest rate levels as a major factor on the earnings that the bank will be able to generate. Looking at their free cash flow data, well, quite frankly, it's hard to pick out anything resembling a trend here. And in first position, we have Buffett's biggest investment by an absolute mile, Apple. Representing 47.8% of their portfolio, that basically means that for every $100 they've invested, a whopping $47.80 has gone into Apple. Now, when you consider Apple's growth since Buffett bought into the tech giant, this has turned out to be another master move from the experienced investor. Now, recently, I have just upgraded my ancient 2012 MacBook Pro to the new model with the M1 chip, and I have to say, it's incredible. Not just compared to my old computer either, because that was pretty ancient, but compared to any other laptop on the market. Also, I am not an Apple fanboy either. My phone is a Samsung, my computer screen is a Dell. I don't really buy into the fanboy thing. I just want the best product and I don't care which company sells it. but seeing how well this new chip performs in my computer, both the speed and the battery life, and knowing that the M2 chip might not be too far away, it's a very exciting time for Apple. However, with a relatively high PE ratio of 39.6, I think it's fair to say that the market is pricing Apple with high expectations. Apple's revenue has had slight peaks and drops over time, but overall, the upward trend is clear to see, and the company are forecasted to continue their revenue growth on a similar path. Now, their earnings have fluctuated more than their revenue. However, the overall growth in the past 6 years, again, is clear to see. And similar to revenue, their earnings are forecasted to continue growing at around the same rate. Free cash flow, however, hasn't shown such a clear trend. While there is slight growth from the start of our data in 2015 to today, it's hard to say that growth has been consistent as with our other two charts. But in spite of this, analysts are forecasting free cash flow to grow in the coming years. So, those are Buffett's 5 largest investments based on his latest filing, and those investments alone make up 80% of his portfolio. However, there is also something else that we have to consider, and that is the price that Buffett paid compared to today's prices. So for Kraft Heinz, Buffett paid an average price of $70 per share. Today's price is $32, which actually means that Buffett paid over double the share price today. And of course, this is really rare to see, as most of his investments have increased since he purchased shares. Buffett bought American Express at an average price of $36. Today, the shares cost $124. For Coca-Cola, Buffett's paid an average price of $11 per share. Today, this value sits at $49. Buffett bought Bank of America's shares for $26. Today's value is $34. And finally, Buffett bought Apple's shares for $9, and today's price is a whopping $129. Now, I've included these prices to make the point that nobody should just go out and copy Buffett or Berkshire Hathaway, but you may be interested in learning about these companies in more depth and doing your own research. And for me, the biggest takeaway point from all of this is the power of seeing an opportunity and holding it for the long term. It seems today like so many investors that I speak to want results in months, not in years. Even though I don't agree with Buffett on everything, I mean, for example, I'm a big fan of technology, which I know he's not a big lover of. One thing that I love about his approach is the long-term patient mindset that he approaches the market with, and I think that's something we can all strive to be better at. Also, it should be noted that Buffett is sitting on a cash pile of over $100 billion today, so it'll be interesting to see if he begins deploying this over 2021 or if he is waiting for a pullback in the markets.